Okay, so this is a journal entry for signing up for a rental agreement, a lease agreement. This might be any number of things. It's framed as an apartment, but you can. This would be the journal entry for this. But lease agreements happen all the time in corporate real estate. So here, the journal entry is for when Smith finds a nice apartment near his campus, and Smith signs a lease for $1,200 a month. What's the journal entry when Smith signs a lease? Now, we're going to say we're doing this journal entry for Smith. All right, we're going to say we're doing it for Smith. All right, the person, the individual. All right, so when you sign a lease and you make that commitment, it sounds weird, but you don't have any journal entries. And you're like, well, wait a second. Don't we have a promise? Don't we have a commitment? Aren't we like going to be in huge trouble if we don't pay this? Yeah, you're right. We probably could take to small claims court. There probably some other things, and you might be tempted to write some sort of liability here. But the reality is there is no liability with this that gets recorded. Remember, in accounting, we record expenses and economic resources as they're incurred and as they're done. And so while we've leased the space, we haven't and signed it, we haven't really experienced any cost with that. There's no cost that's actually been incurred. Nothing's actually happened. All right. Now, the journal entry for when the first rent payment is due. Now this second part, the first rent payment being due, that is something that has a journal entry. This part right here, no journal entry. There's nothing. All right, nothing happens on that. But for B, we do have a journal entry. We have a rent payment. What do we pay rent with? We pay with cash, which is going to be a credit because cash is decreasing. Cash is going down because it's going out to someone else, cash. And the amount is $1,200 a month. All right, $1,200 a month. And then our debit, what our debit's going to be is rent expense. Rent expense. All right, our rent expense. And that's going to reduce our net income and our overall owner's equity. So our cash is going down and our owner's equity is going down. Rent expense of $1,200. All right. And you'll notice that everything's in balance. Our assets went down and our owner's equity went down. Both sides, debit and credit. And don't be fooled by this part. You might be tempted to write a liability down there, but there's no liability in A. There's no journal entry in A. And so that's what makes it kind of a fun question to ask.